GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we break down crypto like you break down after checking your portfolio. It's Saturday, March 1st. I'm your host, Jay Hamilton. And because it's Saturday, it means we're back with the Milk Road Pro research team. That's right. I'm talking about Kyle, Martin, and Adrian. These boys are some of the best in the game because all they do every day is look at the crypto markets and dive deep to make sure you guys win. That's what we're all about. Now, today's episode was recorded and released to Milk Road Pro members on Tuesday, February 25th, but we wanted to make sure we gave you guys some of this alpha as well. In today's episode, we discuss everything is down bad except Maker is up 60% in the last 14 days. What is going on? What's causing this? There was a big buyback that happened. Their buyback program just got announced. We're going to explain that and give you guys some edge and alpha on Maker and what might be coming. Straight up, this might be the token that Milk Road team is most bullish on. Virtuals was making over 500,000 a day back a few months ago, and now they're making a couple grand a day. Is virtuals cooked? Does the revenue really matter? We're going to talk all about virtuals, plus our thoughts on Berachain and more. Now, before we jump in, I've got really exciting news for you guys. The Milk Road team has been cooking with some other awesome partners in the space. I'm talking about Cow Swap Protocol and Radium. We have been working with both of them to make the Milk Road swap. So you guys can now swap your tokens on Milk Road. Go to swap.milkroad.com or hit the link in the show notes because you're going to want to swap here. Not only can you do any Ethereum chain or Solana chain all in one place, awesome, but also you can trade with some of the lowest fees in the space. I'm talking only 15 basis point fees on Milk Road Swap because the milkman ain't want to take your money. He wants you to make more money. So check it out. Today's episode is brought to you by crypto.com cards, one of my favorite cards in the space. Check it out if you haven't already. Link in the show notes. Without further ado, say what's up to the Milk Road Pro research team.
Gentlemen, back for another pro research meeting. Markets have been a little bit in the gutters the last little bit, so it's a tough go, but that's okay. We're still here. We're still researching. We're still learning. The key to success in this space actually is just don't leave during these times. Just keep learning, keep digging deep. And sometimes during these moments, you start to see where the hidden gems are, right? The first thing we're going to talk about is actually Maker, which is not a hidden gem. We've talked about it for forever. However, probably the best performing asset in all of crypto, maybe in all markets during this drawdown, because even the traditional stocks are getting wrecked over the last week or so. So we will touch on that. And then we want to touch on virtuals and just the AI agent ecosystem. We'll hit up some Berachain stuff because they've had a big launch and a lot going on there. And then Martin's got some nerds on payroll stuff, as Chevy calls it, talking about the end game for blockchain. So I think we'll discuss some of that too. And who knows what else we'll come up with. But let's start things off. Just looking at Maker, there's been some big news going on and some great market performance. Let me share a screen here. What bear market or what down only market, Sky or Maker, does not show that at all. If you can see the screen right now, it's currently sitting, as we're recording, this is on Tuesday, at almost $1,500, which is close to its high for the last few months. This has been kind of up and up and holding super strong while Bitcoin's tanking, ETH is tanking, Sol's down, I don't know, 60% or something at this point. And Maker remains strong, which is wild. Now, there's a few reasons, and we'll talk a little bit about them. But the big one that we have talked about on the show so many times, and this is Martin's big sort of like theory of why he invests in certain tokens, which is who's going to be the next buyer of your token. We think it's going to be protocols that generate good revenue. And Maker just announced yesterday or a couple days ago, actually Rune here, the founder of Maker Sky, said that they've turned on the Sky Smart Burn engine and they are beginning to buy Sky tokens and burn them at a rate of, get this, $1 million per day. Now, let's just put that into context. $1 million per day, that's $365 million of buying and burning Maker in a year if it was annualized. Now, to be fair, this isn't something that they're going to do for the entire year. They won't have that much capital. They're not sure how much it'll be, but they're doing kind of an initial stimulus, and we don't know how long it'll be, maybe a few months kind of thing. But if they did $365 million of buybacks and burns in a year, That equals, I think the market cap of Sky or Maker is around 1.2 billion. That is 1/4 of the entire market cap of this token that the protocol is going to buy over the next year. Now, if you look at what happened over the last week where markets are red, what was going on there? That's people panic selling. I can tell you right now, the Sky protocol does not panic sell, right? It just buys. It doesn't care if markets are green, if markets are red. It just keeps buying and it keeps burning. And I can't think of a better place to put my capital than a protocol that's buying back its own token and doesn't give a shit about the market. So to me, this is wild. We said this was coming. I didn't think it was going to come this fast. Maybe you knew more than I did, Martin. But to me, this is massive. And then just to be clear, it's not always going to be a million. Eventually, after this sort of like initial stimulus, they'll set like a rate depending on their profitability. And then it'll just kind of fluctuate from then on. But if this is something that continues at this amount, then Maker at 1.2 billion makes 0 sense, and this thing needs to be repriced. And I think that's kind of what's happening right now. Like the fact that we're sitting in the green on Maker during a time when everything else is red and just plummeting. Bitcoin now at 86,000, and Maker's up 4%. It's absolutely insane. So, Martin, I'm going to toss over to you to start. What the heck's going on here? Says Maker just figured it out, or what?
I think there is no one else like with maker bags who hasn't sold yet. Like no more selling pressure. And now we are only getting like now all the maker holders are pretty much people who understands what's going on, and those are not willing to sell, especially when fundamentals are on your side and everything seems like maker is finally starting to getting like more adoption for their stablecoin, and now they just need to make few more updates to make sure that there is sustainable profitability for the protocol. And yeah, I hope that more market participants will start to pay attention to maker, because it's eventually what this whole industry is about, that you want to find some strong protocols who are able to sell the product and have product market fit, and then at some point you will just like evaluate them on a cash flow basis, and those are just early signs of uh, of that it's happening. And you don't really need to rely on someone else buying your bags. Like the protocols will do it for you. And like, you know, as you said, they are not gonna sustain this buybacks worth 1 million per day for the whole year, obviously. But that's not the point. And like at some point, I don't necessarily need to do buybacks at all. Like if there are some other ways how makers should invest their money into something else, which will just help them to strengthen the network effects or something else, I would like vote for that rather than just buybacks. So it's not like people need to be aware that this is like different story than most projects are experiencing these days. They are just like, okay, how much runway do we have? Like, are we able to cover, I don't know, 12 months or 2 years without generating any profits? And like maker stories, it's a complete different story. Now they are making a ton of money, and finally there are some good good shifts in the governance, and like more community people are getting back to paying attention to community calls and like asking questions on Discord and creating more pressure on Rune to be more transparent and everything. So I believe we are on the right path. And to be honest, like it's not just maker. Like if you look at Jupiter just also started their own buybacks worth of almost 2 million per day. You have Hyperliquid, and you have like many more projects who are just making money, and they are already started or they are going to start pretty soon to do the buybacks. So it feels like, it's not just the theory that like fundamentals matter because you don't need to bother who is the next buyer, but it's really kind of happening, and it's materializing that promise that this whole thesis is based about. So yeah, happy to see that.
How long can they sustain these buybacks? Are they using their treasury?
Yes, sort of. They are gonna do those buybacks for 2 months, I believe. Yeah.
Okay.
17
50
mil.
days. At current numbers, it's around 50 days. They'll do 1 million a day. And then I'm not sure what it goes down to. He said likely the rate will be lowered before then, ensure the burn can keep going indefinitely at a sustainable rate after this initial burst. So we'll see how long it goes for.
Maybe the
but I
perfect
mean,
time for it. It comes
I
with a
know.
marketing boost now.
Yeah, well, and their estimated annual net revenue currently sits at 140 million, and that's just skyrocketing right now. As we mentioned, I don't know, a few weeks ago, there were some issues with their expenses. They're also working towards one of their goals of 2025 is to lower their expenses, their core expenses to zero by the end of this year. Basically, offloading all expenses to their like stars or their sub DAOs, whatever you want to call it. So the level of which Sky or Maker is starting to execute and kind of like what they're able to do when you have such a strong business already. I mean, they've been around literally for 10 years. They've been around like as long as Ethereum has been around, right? This thing is an OG. And so the world they're working in is way different than basically any other protocol that exists, I think, on chain right now. They're actually a legit business driving real revenues, and bear markets don't hurt them. Like look at, not bear market, but whatever we're in right now. Other than obviously there was a bit of a scare with the Bybit hack, so some people had to remove some liquidity like Athena and stuff. It's still just gone from 5 billion in end of December all the way up to close to 9 billion. Now we're sitting at 8 billion at a time when markets have done nothing but go down, right? And then at the same time, its collateral has gone up, and so the way that it generates revenue has also gone up during that time. And so like this thing is just, its product is getting better as prices go down. And when we get to virtuals in a second, we're going to see virtuals, and even you mentioned Jupiter, et cetera, like most other protocols are very dependent on prices. But because Sky is in the stablecoin world, it's actually not. So it just continues to grow regardless of what prices do. So that's quite interesting. Are there others? Like, do you think this is going to be a thing? You mentioned Jupiter and Hyperliquid are already doing this. You think this is going to be a trend here in 2025, or like, are other protocols just not profitable enough yet to start to have meaningful buybacks? What do you think?
I think there are already multiple who are doing buybacks or who are in the position that they could just start buybacks. It's just hard to understand all of them in depth enough to understand all the dynamics and nuances in there. But there is Radium, there is Athena, there is Aave, like many more who are like just one proposal from doing buybacks.
Yeah.
But it has to be substantial, because BNB chain, for example, they are doing buybacks forever, and it was just such a low amount, it never had a big impact.
Yeah, like I don't consider Binance chain as a serious thing, so it needs
It's
to
worth
be like,
100 bill.
Others do.
yeah, I know. But that's a different thing for like layer ones. We still don't know if it's worth 100 bill, but is it maybe overvalued and people are not really buying it because there is no real reason to buy it?
It's more focused on the Asian market. It's just also something we don't get here, I think.
Do you know what is the coolest thing about what Maker and Sky are doing right now? I'm just going to start calling it Sky, I think. I can't seem to get away from the Maker thing. But so like token buybacks is not a new thing. We have stock buybacks in the traditional world as well. However, you only get an update every quarter on its metrics and its buybacks and what it's doing. And just when something's on chain, I can just every day or whenever you want, you can go and look at how's their business doing, what's their revenue doing, what's their buybacks that they're doing. Like you can just track it in real time, and it's just insane to me. It's super super cool, and I think as more businesses do this, it's just going to be wild. It's that transparency, you just don't get that, right? You got to wait every quarter for these guys to like create this like slideshow for you and then go on this stupid call and tell you about their numbers. Like it's so ridiculous. Whereas you can just watch this all live. It's pretty cool.
And also it's like
still growing. So with this stablecoin growth, which is quite substantial, it should not be the end of the bull market, I think, because typically we don't see stables growing that much.
Yeah,
I was just about to say that if you were like really listening or like investing in stocks, then you might not have enough data to provide this kind of analysis, because you might need some proprietary data or something you cannot really find on the internet. But here everything is on the blockchain, so you can find everything anytime you want. It's a huge difference.
Cool. All right, let's we just wanted to make sure everyone updates to know what the heck is going on. I know a lot of people were wondering how the heck is Maker so strong in this environment, and it's literally there's just no sellers left. Look, Maker went down a lot over the last little while, so it went down a lot, but there's just no sellers, and then they launched buybacks. and their revenue's growing. And it's like the one time we're seeing fundamentals actually kick in, because it's not even just like people are speculating on the fundamentals being good. It's just there's actually something buying back this token nonstop now. With no selling, the price just has no choice but to go up. Doesn't matter what else is going on in the market. So pretty cool to see that. I mean, congrats to Rune and the team over there. They're really crushing it. I'm excited to see where this thing continues to go. All right, let's talk about the next one, which is maybe on the opposite end of the spectrum here of what Maker's doing, and that is AI agents and virtuals. Let me just pop up a chart of virtuals first, just to give context to the to all of us here and the listeners. Virtuals, if we look at the last little while here, has had a hell of a ride. I mean, what's crazy though, like in October, so what is that, like 6 months ago, not even, this thing was worth 10 cents, not even 5 cents. Let's keep going. 5 cents, October 1st. So 6 months ago, not even 6 months ago, right? And it went all the way up to $5. Okay. Close to $5. And then now it is down to $1. So it has had a journey in the last 6 months, I would say. AI agents were the narrative for a bit there. Everyone was calling that it's going to be the big narrative. It's going to take over meme coins. And I think it sort of did that for a while. And then obviously the wind kind of was taken out of its sails, and the whole market, meme coins, AI agents, everything kind of imploded. At the time that AI agents were so big, virtuals was the thing. There's virtuals and there's AI16Z were the big thing, right? Everyone wanted a piece of it. And the reason I'm bringing up virtuals is my question is virtuals cooked? Is it the next Friendtech? Let's call it. For those that were around, that was the SocialFi thing that we had, that had its moment, had its narrative. It was generating all this revenue. Everyone thought it was going to be the next big thing. And then now there's like 4 users or something. And when we look at virtuals, here's the reason why I asked this question. Like, obviously its revenue has been cooked, but it was never valued off its revenue anyway, so it doesn't really matter. It's currently making, yesterday it made $2,500 US in a day. Milk Road makes more money than that. Okay. And this thing's valued, for example, for context, it's valued at $1 billion. Okay. Milk Road's not valued at $1 billion. So like, even if the narrative comes back, does this make any sense? Right. Like that, it was at one point making $575,000 a day. That was just a month and a half ago. Imagine the virtuals team. They're like, holy shit, we made $500,000 in a day. And a month and a half later, you're making $2,500. Like, that's wild to me that this stuff even happens. But what worries me even more is it's less about the revenue, in my opinion. It's more about the whole idea of virtuals is it needs teams launching AI agents and launching the AI agent tokens, obviously. So he's just using its product. It's okay if the revenue's gone down, but are people still using the product? Yesterday, it had 10 tokens launched on it. Here, let me make this big for everyone. It makes it better to see. It had 10 tokens launched. The day before, it had 9. Earlier in January, it was at like 200 to 250. Back in December, it was like 500 to 1,000 to 1,500. So obviously, that's kind of fizzling out. The chart really does look like Friendtech. Do people really need good prices to launch tokens? Like, I understand for the token to go up, you probably need better market conditions. But like, if we're trying to build technology here and useful AI agents, which to me is what would make this thing actually valuable, the fact that no one's launching it now is a bit weird. I know there are some incentives around, you got to launch around a certain time with good prices so that your tokens get listed on certain things. So it's a weird setup. But like, ultimately for me, when I look at, will this narrative come back? Look, I think AI agent narrative is not going anywhere, but will it come back to virtuals is really my question. And I don't know. The main thing I saw with virtuals was there's a lot of AI agents, tweeting. And when I've unfollowed them all now because I think that they tweet just absolute nonsense. They're hallucinating all the time. Their replies are complete garbage. Their tweets make no sense. But they tweet so much that every once in a while they get one right and people highlight it. And so I'm kind of like, I am bullish on AI agents. I'm not sure I'm bullish. I'm definitely not bullish on the AI agents that exist today. And then I'm just wondering, like, is virtuals going to be the thing that leads this narrative forward, or will we move on to something else? Will they just, like, as the AI narrative comes back, because obviously like AI continues to improve day over day. Like Gronk is unreal, and that just came out like last week. And so like these things will improve. I just, is there a moat to virtuals? Will that capital come back to this thing, even though it's imploded so much? I'd love to get your guys' opinions on virtuals, and let's kind of just have a discussion here of what's going to happen with overall with AI agents in that narrative, and then we can kind of bring it back into specifically with virtuals. So yeah, what do you guys think?
I mean, first of all, why is no one launching a token in the current market? Because prices are down so much and altcoins are not in demand. And especially for virtuals, you have a mechanism similar to pump.fun. So you have a bonding curve and you need to survive it for your agent to get from the prototype stage to the actual stage where it can also tweet, for example. And you need some capital for that. So you don't want to launch your agent right now where there is no demand for agents. But they could certainly come back because AI agents will profit a lot from all of the Web 2 innovations, from everything that OpenAI and DeepSeek and maybe also Grok in the future do. And these agents are already on Twitter, so why shouldn't they be able to use Grok in the future? It could be another revenue stream for X, basically. Yeah. So the first phase is definitely over. We had this huge bubble which bursted a lot, but Virtuals was one of the top gainers in 2024. They made about 231x, so that's actually quite impressive. And for those investing into narratives, you have to sell these. You can't just hold them like your Bitcoin or ETH or Solana. You can't expect you're playing with fire, but you can't burn yourself. That's not happening. So this is what happened. But the next leg up, AI has still a lot of mindshare. It's still the narrative with the most mindshare. It's always about 30%. DeFi and fundamentals, basically, they are getting more mindshare right now, which is an important and a good step. But it's not dying completely. And we are seeing actually some interesting innovations since Virtuals is launching on Solana now. Ask Billy Bets is a new sports prediction agent, which got shilled by a basketball player. So there are some new ideas with all of this sports gambling and betting stuff. And they are trying this, and this could actually catch a bit. So I'm trying to monitor this. They are trying new stuff, and that's the important thing. But right now, the narrative's not in demand, so prices are down.
I know that we compare virtuals to, let's say, Pump.fun, right? My only thing as I look at that comparison is you said people won't launch AI agent tokens right now because they don't have like good price action. So you don't want to do it in like it's not a bear market we're in, but when you're having, a down market. But then when I look at Pump.fun, it hasn't really been impacted. People still launch Pump.fun tokens all day, every day. They don't give a shit, right? Now, do they perform well? Of course not. But they can still just launch them. And this is one of the things about virtuals is like, as much as people are kind of pinning virtuals as the next Pump.fun, but better meme tokens, the problem is there is utility in AI agents, right? Pump.fun, you just launch tokens and it doesn't matter. There is zero utility. The moment you add utility, it means you actually have to create good utility. You have to create value. And you don't have these like grifters and these whoever just launching a gajillion tokens. You need actual teams, you need developers, you need people with ideas to launch and then iterate and keep building and keep improving. And so like you can't just rely on a narrative. You actually have to have teams build something of substance. Otherwise, I don't see why the chart would ever stay like this. I don't see why the chart will ever go up again. Do you know what I mean? Like you need something of substance because this isn't a meme coin. It's an AI agent.
You absolutely need something of substance, but it's what every team is doing. They are waiting with airdrops for better market sentiment. Berachain was waiting for quite some time. So this is what they do because they are hoping they are getting into the next leg up. Doesn't work out.
Basically, what you're saying is grifters can't launch AI agents, and so therefore AI virtuals is cooked because it's too hard to launch an AI agent, whereas it's very easy to launch a meme coin.
So the way that virtuals makes revenue is very similar to Pump.fun. It needs volume, right? It needs a lot of tokens. It needs a lot of trading. And so like that makes sense for Pump.fun. And I think that never goes away, no matter what happens, because people can launch them for free and you don't need to be a dev. You just need to be an idiot with a computer and you can launch whatever you want, right? And then people just do that. They just automate it. But that's the problem with virtuals is it doesn't have the same business model. Well, it has the same revenue model, but it doesn't have the same product, right? You can't just, any idiot with a computer can launch a token there. And so like for virtuals to succeed, it needs
Basically, you can, because it's a no-code launch pad. You can very easily do this if you
right.
want.
I guess, sure, you can, because it is no code. So I guess any idiot could launch it. But just to me, there's a difference between an AI agent token and a meme coin, right? A meme coin is like, okay, I just need to hope that this thing's going to get attention at some point, and a bunch of people want to buy a cat thing because it's funny. Whereas an AI agent, you're like, I need to hope that people want to use this thing, and which means it needs some sort of utility, which means some idiot's probably not going to build some AI agent with utility. And so I just, I struggle to see it getting the same volumes as Pumped Up Fund, which means I don't know how Virtuals gets the same revenues as Pumped Up Fund, which was kind of the reason everyone was buying it. It's like, oh, it's the AI agent version of Pumped Up Fund. And now that I'm looking at it and seeing what's happened here in the last few weeks, it's like, well, maybe it's actually not, like maybe it can't be the Pumped Up Fund. Because there's a limit to it, almost like Friendtech. It's like Friendtech could have gone on for forever, but it had this like, what was that called? The where you had to buy the tokens, but you needed more and more capital or more people to keep buying them. The curve, what do you call that? Anyway, it doesn't matter. But it had a limit, and it feels like maybe there's a limit here to virtuals as well. And so should it be worth $1 billion? I'm unsure.
If they wouldn't be building and expanding to another chain, I would probably think in a similar way, but they are trying to innovate. They are trying to get into new markets. So I wouldn't be so
Here's the
negative
other,
about it.
well,
Like-
here's the other bear take. You go, Martin, first.
I hear your point, but you're basically saying that it's no, let me put it another way. Like, if you should evaluate the business perspective from something that's launching a meme coin versus AI agent, like let's say in a couple of years, you would probably be more bullish on AI agents because that's building something sustainable, right?
Yes.
It like the whole premise is that they are gonna bring something new, something useful, unlike meme coins.
Yes.
Well,
hopefully.
I'm maybe overly critic to meme coins, but maybe there is something too. But yeah, so like now you are comparing meme coins, which are around for a couple of years already. Everyone knows them. It's part of the gamble game. Everyone likes it, and etc. And now AI agents are here like 2-3 months. So it's not really fair to compare them like, okay, people are still launching meme coins, but they are not launching AI agents. But
Right.
in the long term, people are still probably going to launch meme coins because people love to gamble. I agree that with AI agents, it's a different story. Maybe it's not that much about gamble. It's maybe more about like trying to really crack it down and build something useful. And like think of it as a startups launching like, okay, I want to solve this problem. So instead of like, I don't know, building traditional startup in a traditional way, I will just launch my AI agent trying to figure out this thing but be the best one at it. And it's the model that it's going to work in the future, I
That
think.
is you make a great point. That's also my bear case for this, because here's the difference. Pumped Up Fund virtuals, they're both launch pads. They both need lots of things launching, lots of volume, okay, to be successful. Otherwise, there's no point in it, and it's not required. Pumped Up Fund has no competition from the traditional world. It doesn't exist anywhere else, and it can't exist anywhere else. There's just Pumped Up Fund, right? But virtuals, like you said, these AI agents need to create something of value, right? Whereas meme coins didn't. And it won't succeed unless their AI agents and a bunch of them create a bunch of value, right? And actually create some utility here. The problem is virtuals has competition from the traditional world. It's competing with OpenAI. It's competing with Microsoft and Grok and Facebook, et cetera, et cetera. Whereas Pumped Up Fund had no competition. And so that to me makes it even worse. The fact that they need to succeed in creating a company and they're already worth $1 billion. Like, to me, it's like, I get it. AI agents are going to be big, and I would invest in AI agent startups. Would I invest in an AI startup at $1 billion? Especially when there's competition of the biggest companies in the world? To me, that seems a bit crazy. And especially with the business model of virtuals, you're not really investing in an AI agent succeeding. You're investing in thousands of AI agents succeeding and continuously succeeding. Otherwise, Virtuals doesn't really have a business model here because it's a launch pad. Now, maybe it can iterate and become more than a launch pad, which I think it's trying to do with more features. I know it's like created the I forget what it's called, business commerce something. But like Coinbase just launched that same thing, and so now I'm like, okay, now it's also competing with Coinbase. Like, to me, it's in a tough position, I think.
Virtuals is not really competing with OpenAI and other Web2 companies because none of them is building an agent that can use any on-chain transaction, for example, or that can manage your portfolio, or that can have a wallet and trade crypto, basically. So you have this, and you can also not invest into any Web2 AI startups, at least the good ones, if you're not an accredited investor.
Right, but so there are many people, including Coinbase, who's creating the ability right now for AI agents to use wallets, whether they're virtuals or OpenAI. Like, that's not going to be a hard thing for people to create. Everyone is like, there's a lot of teams building that. So like, we don't have a moat because virtuals allows you to launch a token or allows you to have a wallet. That's going to exist for all AI agents, regardless of where they come from.
Yep.
It might be a moat today, but that's definitely coming. It's coming very fast. I think Coinbase already has this. I'm pretty sure Coinbase enabled this with who was the first big, was it Cerebro or whoever? Brian
They have
Armstrong's
an
team was
agent kit, something like that.
yeah. So like, I think that's already going to exist. Now you are right. You can't invest in OpenAI technically through Microsoft, but it's not a direct investment. But like, who's to say, like, why can't I go and create an AI agent using OpenAI, which probably has better tools, and then just launch a token? And I can launch it on Pump.Fun if I wanted to represent that. You know what I mean? Like, I don't think I need a launchpad to do it.
But it's
Well-
Web 2 and it doesn't have native integrated Web 3 functionality.
But don't you think that that's going to be built? Like Coinbase is going to build that, or people are already starting to build that?
Coinbase, okay, but it's also a Web 3 company. It's not Microsoft.
I'm
think
just saying there's a lot of competition.
I think a good question here. So like when you compare it to friend tech, it's taking it in the context of an early experiment in a new tech, right?
Yeah.
Friend tech was an early experiment in SocialFi. No SocialFi has worked out yet. Every single one of them up crash, right?
Yeah.
AI agent incubators, new experiment. I think we would all agree that there is going to be a business that wins that. I think that it makes a lot of sense to have an AI agent incubator because a lot of people are going to want to launch AI agents for very micro small things, right? Like I'm going to have a problem. I'm going to want to build an AI agent for it to solve my problem, right? And then I might realize, oh, this solves 1,000 other people's problem, but I'm not, OpenAI is never going to launch something on this scale. And I want to raise some capital in order to build it further. Great. Launching it through an incubator is a great way to raise some capital and to get it on chain. And maybe it becomes an even bigger business, right? So I can see the incubator model for AI agents. Whether it's virtuals or something else, I agree with the fact that like it doesn't feel there is no clear moat for virtuals right now. There could easily be another incubator that wins. Quick break from today's show, ladies and gentlemen, to tell you guys about crypto.com debit cards. Now, these cards are one of my favorite ways to spend your on-chain dollars in the real world, on coffee, on flights, whatever you're buying on a day-to-day basis. Here's why I love it. They got great perks, Netflix subscription, Spotify subscription, and a whole bunch more. Access to travel lounges if you're a traveler like myself, and you get rewards in crypto on chain. So you're building your on-chain dollars just every time you spend. Check out the link in the show notes and get your crypto.com card today. Now, back to the episode with the Milk Road Pro research team.
I'll show you something cool if you bring up my screen. These are the popular open source frameworks in Web3. What you're seeing here in the core section, you have these different categories. One is very good at reasoning, memory, embeddings, personality, multi-agent. Eliza, for example, is very good at most of them. But if you want something specialized, if you are absolutely needing embeddings here or multi-agents, you would most likely use RIG, the ARC framework, and not the ELIZA framework. So depending on what you need, you might use a different framework, and from there you will have some winners, of course, but specialized AI tools will always be better than generalized ones. Virtuals is not here because it's not open source, of course, but it's more going into the no code. It's more going into the gaming direction, maybe NPCs in games. So there's a lot to be done, but yeah, that's how I see it. And that's also why you might have not only one winner, but you might have several winners.
So I don't doubt that there will be successful AI agents that come out of the crypto world. Okay. I think for sure that'll happen because Grok and OpenAI, they're not going to build AI agents that do things that are native to crypto, right? They'll do more general things that can write and do whatever they do. But like if you go to use any of those today on anything to do with crypto trading or crypto advice, like they're actually useless. So like there's our edge in the crypto world to create AI agents that can, we already have some that talk about and share alpha. And then there's some that will like do things on chain. Like we'll have the edge there and we'll be ahead of all that. My issue goes back to Virtuals needs tens of thousands of AI agents to launch all the time, daily, for it to succeed, like Pumped Up Fund and to generate revenue. And I see no world where that happens. Zero world. Even if some of these AI agents do succeed, there will just be a few of them that succeed, right? Once I launch an AI agent that can trade for me or whatever, does everyone now launch an AI agent that does that, or they just use mine? They probably just use mine because mine actually works and it's good. And so it's not like meme coins where there's like, once you get one, you don't need a bunch more, right? Like meme coins, you can just have infinite. It doesn't matter. But AI agents, you won't get that because you need a team to actually build it and create something good. And then once it's good, everyone's going to want to use that because it's the best one, right? Once you have a terminal that is the best at giving you crypto advice, everyone's just going to go use that. Why would they try to then compete with that? Maybe a few teams will compete, but not thousands. Whereas like if you launch a meme coin, I go, I'll launch a meme coin. And then Martin's like, I'll launch a meme coin. I'll launch a meme. And so the model works as a launch pad for Pumped Up Fund. I don't know how that works for AI agents because you actually need teams to build something of substance.
It doesn't matter. We only need a couple useful AI agents and they will bring the whole narrative back again. And it doesn't matter if this a specific AI agent is launched on that thing or that thing. So it will like, okay, the people will, okay, I need exposure to AI. What are the best things out there? So they will probably learn about Eliza, virtuals, this Rick, and stuff like that. And they will buy the pick and shovels. They might not be buying the AI agents itself. And we think that the narrative is still coming back. And it doesn't matter if it's going to be from agent who is launched elsewhere. The point is the AI agent meta is coming back at some point and it should drive back the valuations. Like, don't think if it's overvalued, undervalued. It's like you can do these things for a narrative plays, but that's the idea here.
Yeah. Okay. You guys actually, anyone else have any other thoughts here?
I mean,
Jay,
okay, so we all seem to agree that the narrative is coming back. Martin,
Yeah.
I think the narrative is coming back. Everyone
I
thinks
agree
the
with that.
narrative, right?
I agree.
I agree with that too. To me, it's a question of time now. How long is it going to take until the narrative comes back? And none of us know right now, right? Like if it takes a month or two, I feel good about virtuals capturing it still. Like there's no one else yet. Their moat will last a short amount of time. If this is like 6 months or 8 months, like then I don't know if it's virtuals because in that time period, I could see something else being launched, something else coming out. And then I have less confidence in it being virtuals that gets it.
I'm going to go out on a limb here. And if anyone wants to take the other side of this bet, I'm down to bet whatever you want. In this year, virtuals does not go back to all-time highs. So it never reaches $5 again or for whatever it hit, 450, 475. Anyone want to take the other side of that bet?
This year.
This cycle, let's say this cycle, not even this year, this cycle, virtuals does not go back to all-time highs. And by the way, for the listeners,
I don't like the odds. I don't like the odds on that bet. I don't like the odds on that bet. I like the odds on your end better than the odds on the other end.
Interesting. Okay. Anyone else?
What's in
Adrian's getting ready. He's like, all right, Teddy, let's go. For the listeners, I don't have like strong conviction here, so don't like go and sell everything you have or like don't make a financial decision based on this. I'm more just like trying to have some fun. But although I do think I don't think it's going all-time highs again. I'm bearish. All right, we'll leave it there. You guys don't have to say anything. Let's go. Speaking of bears, we'll go to Berachain. Berachain has had some hype as of late. Adrian's been digging in. Why don't you get us up to speed? What's going on over on Berachain there, Adrian?
Sure, yeah. Bring up the screen share.
There we go.
Berachain TVL is actually at 3.26 billion, and it became the 6th biggest chain by TVL, which is quite the accomplishment. So they are a bigger TVL buys than Base, which
When did it
I guess
launch?
nobody really expected. They just launched 3 weeks ago. February
Jeez,
6th.
that's the fastest TVL growth ever for any blockchain, right? Like I'm pretty sure nothing has gone that fast before.
Right, yeah. And they had a special strategy for that. They have more than 1.2 billion in stables right now on chain. Trading volume was also not that bad in the last 24 hours, 95 million. So there is traction actually on the chain. And why this huge TVL? Because of their Roico or Boico, as they call it, initiative. They had about 2.7 billion in pre-deposits before the chain was even launched. So this is an interesting go-to-market strategy to don't have the cold start problem, but already have some TVL that supports trading activity on chain. And yeah, this is basically all what Berachain is about, with the proof of liquidity mechanism, where they don't have only a proof of stake, but liquidity providers actually have voting rights and also have a say in where the incentives and where the yield goes to. And in this Boico initiative, they had different opportunities. You could supply something like a BTC, but also liquidity pairs, but also stable coins at 14% APY. So that's why a lot of people did this. And the good API opportunities, they actually filled up extremely fast. So most of them were closed after a few hours or after a few days. So that's quite the interesting initiative what they did there. And why are people still going to Berachain? Because it's not only the pre-deposits, but of course also what we are seeing here in the last 7 days, plus 8.5%, which is substantial with 3.2 billion TVL. They have huge yields basically with their Ponzinomics. Disclaimer, this is very, very dangerous, and the Berachain token is very inflationary. But what you can get on chain, for example, is here with their stablecoins, BYUSD and Honey, 16.83% APY, which is really good compared to other yield opportunities. And if you like the risk, if you like to go the risk curve a little bit up, you can also do something like a Berachain and the Honey token, and then you can get something like 109% APY. You then take this liquidity token and restake it on infrared, and there you can get additional 121%. So for one liquidity pair, you can get about 230 to 250% APY in BGT tokens back, actually, which is the governance token on Berachain, and you have to burn this BGT to get Bera, and then you can sell it. So there will be a lot of sell pressure, there will be a lot of inflation on the chain, but for everybody who's interested in DeFi and gambling a little bit, it's actually something interesting to check out.
I gotta say, the one thing that Berachain has done really well that our industry really sucks at is marketing, and its go-to-market strategy. Like for them to get over 3 billion in 3 weeks is absolutely nuts. And I mean, they've built a pretty big community for not even being live. They've done that through, like, I don't know, events at conferences, just doing a bunch of different things. They've done a really good job on that. I wonder how much money they've spent on all these events and marketing. I think it's a heck of a lot. And so
they got 200 million from VCs.
right. Yeah. They're heavily, capitalized. It's, the one thing I would say, if we look at the token price, like obviously it tanked once Bera launched, which makes sense. I mean, I know there's a big community, but their community is a bunch of opportunistic people that are there to try to make quick buck. And then also their whole strategy was, let's get people in, we'll give them Bera tokens through airdrops, also through all this yield you're talking about. And so like, what are people going to do with those winnings and those rewards? They're obviously going to sell them. So it was like, to me, it was very obvious that token was going to go down, though it seems like now it's sitting at what, 3 billion market cap or 3.5 billion market
3
cap?
billion FTV.
3 billion FTV, which is wild because its TVL is over 3 billion, right? And so to me, it's like, the hardest thing about a blockchain is, can it get a bunch of users fast? And then can it get a bunch of liquidity fast? It's not hard to get users because you can get like people from all around the world that'll bring $1 over and do whatever to get an airdrop. But if you can bring meaningful amounts of liquidity, which they did at 3 billion, that's a great way to bootstrap. Now the question is like, what can they do from here? You know?
And how much of that liquidity that was pre-deposited will actually stay on chain? It's locked for
Right.
1 to 3 months, so we will see how much stays on chain then.
I just think about Blast, and like Blast
Right.
got
Yeah.
what, two? I'm pulling up the chart right here. So let me screen share. Blast got up to 2.2 billion TVL, and then
People
fell off
sending
a
money
cliff.
to some multisig with unknown keys to it.
For yield. That's
for
the
yield. It was all.
Mm.
I mean,
Good point.
similar to Berachain, right?
Yeah,
Like,
but they never build
farming and yield.
But they never build a community. I think you can't compare Blast and Berachain.
Man, but this thing
Really,
had,
you don't think so?
they
I
had
think
the
so.
high, everyone was
Different
talking
community,
about
different
Blast.
community,
Everyone
but-
felt like they were a community, and they were
But
like,
it was just
this is
airdrop
the DJ
farming.
community. Yeah, I forgot about Blast. I mean, I didn't forget about Blast, but in this context, I forgot them. This does feel very much like Blast. What's Blast worth these days? Probably not much, huh?
But you didn't have any innovations on Blast. You have some innovation on Berachain with their proof of liquidity consensus mechanism, with new protocols coming, which are trying something new.
To be fair, Blast had native yield before, and actually still no one really has this, but they have native yield on their ETH and stables. So you just like, every ETH and every stable that you hold there just automatically gets yield. That was pretty wild, and still is pretty wild. Like, I actually am surprised that more chains have not done that. And I think it's because there is a big tech overhaul to do it. Blast did a good job on that, I thought. And then Blast also is trying to build the full front end for it too, right? With their app and their wallet, et cetera. So like, I was actually always I wasn't bullish on Blast token, but bullish on Blast team and like the thing that they're building. But it does seem they did bring, I would bet a lot of the people that were on Blast that got that airdrop and were farming over there are the people that are now over on Bera, right? I don't think Bera has necessarily brought new people into the industry. I think they've just gotten a lot of the degen yield seekers to come over there. And I think, as we've seen in Blast, they don't stay very long, right?
To me, the question is like, okay, so I agree. Bera has maybe has better tech, right? Like,
Do they?
the question is there an app or a protocol that is actually using that tech, that is going to launch, that is going to capture the attention and the mind share? Because we have seen with Blast and with other chains that airdrop farming and APY incentives like Bear is doing right now do not last forever. So that will dry up eventually. So the question is like, can they have a hyper liquid like app that everybody uses? And that's why Hype is done so well, right? Because it's being able to maintain usage beyond just the speculation.
Right, it's all about yield as well. You have to be kind of a yield farmer and try to get this passive income somehow and like that.
And Adrian, from what I gather, you're not necessarily saying Bera is a good investment. You're saying if you want some really high yields, there is some opportunity right now on Bera, is I think what you're pitching here,
Exactly,
right?
Yeah.
Okay. Are you bullish or bearish on Bera, the token?
At the current price, I'm not bearish on the token, I'd
Not
say.
bearish, okay.
Long term, because of the inflation, I'm bearish. Right now, the token is valued quite fairly.
You know, it's starting to feel like, so I mean, there's always been a lot of L1s that come out, but like not a ton, right? Like you get a few in a year back in the day. And then there was L2s that came out, and there was like hundreds of L2s that launched. All their tokens got cooked because, like, you know, where were you going to put it? If you want to invest in L2s, there was, 500 different tokens you could buy. So they all got kind of diluted out. It feels like that's what's happening here with L1s now. Like how many L1s have we had launched in the last 3 weeks, or whatever, month or 2 months? It's like Berachain and Monad and Mega ETH, and I don't even know, the list goes on and on and on. It's starting to feel like we're getting just too many, and it's going to be very hard for any L1 tokens to go up in price that don't have meaningful adoption, right? I think the idea of it's an L1, it's got to be worth 10 billion or whatever. I think that's kind of going away because there's too many of them. It seems exactly like what happened with L2s back in, was it 2023? I think is when all those tokens launched, or 2022 to 2023, and all those kind of just got diluted. Feels like maybe the same thing here.
Yeah, general L1s won't work anymore. They need a special use case, exactly like L2s.
Yeah.
What about guys like everyone's bullish on ETH? How is called the
Mega
super
ETH.
fast-
Mega ETH.
Mega ETH, yeah, Mega ETH. Like what they are bringing new to the ecosystem. Like they are just saying like, okay, it's going to be like super fast, layer 2, and like, okay, but now we have Hyperliquid, who is also able to do like 100K transactions per second. Now we might have Monad or someone else. Like what is like, what are those guys bringing new? Like you either need to have some user base, or you need to have some working product like Hyperliquid. And
Yeah,
like all
yeah.
these new people coming in, launching their own chains without nothing, like good luck, guys. I think that's this narrative is over.
Or you have to, I will say, I will buy into, or you have to be incredibly well funded like Berachain and be really good at marketing and building community, because that could lead to one of those
I don't
things.
even
You can
think
get
that
the
matters.
users, and you can attract the builders who might go build the app that keeps people
But that
around.
was Blast, well-funded and incredible marketers.
True.
He understood incentives more than anyone, and it didn't work. I actually don't think that like a lot of money in marketing dollars makes sense in crypto, because it's actually such a small industry. There's not a lot of users, especially for chains that they just do yield or they just do DeFi stuff. You're talking like 1 million people max that actually will do this, and not a lot of them are like bringing a load of capital. And so like you actually have a very, very small market. And like in any business, if you're going to spend marketing dollars on an industry that's only like 1 million people, you can't really spend hundreds of thousands or millions of dollars in marketing, because like you're maxing out your marketing dollars, right? You spend millions of dollars in marketing when your TAM is hundreds of millions of people, right? And so I don't know that $200 million is needed to market. I understand you can get a bunch of people over real quick to like get some incentives, but is that even profitable marketing? Like, I don't think so. Like probably the amount of bearer tokens these guys are giving away is just like, I don't think it's actually profitable, and you're not keeping them either. So I just, I don't think that works either. I don't think it's about being capitalized or a marketing budget.
You were using TV. Sorry,
Yeah.
go ahead.
I was gonna say, I think you got to create something that keep people around, and yield isn't that, because yield isn't sustainable, except for Maker. That's because they actually have sustainable yield.
Yeah, like you started this discussion talking about TVL, and TVL is the metric you can fake pretty easily. So all the incentives, like if they are gonna 50% of new Bera tokens is gonna be distributed this year. So it's like, if it's 3 bill right now, so 1.5 billion over the next year. So that's what probably drives the whole TVL and the liquidity inflows. So it's like, are they really good in marketing and creating community, or is it just like paying
Economics?
Yeah.
Leave it
I
to
think
crypto.
it's 50% from market cap inflation, so it's less, because 1.5 billion additional supply would be crushing the token.
So what percent of the 3 whatever billion in TVL is actually just Bearer token? Is it a lot of it? Because L2s also did this trick, right? Their TVL looked big, or their assets on chain, and ended up like Arbitrums, for example, was just billions of dollars of ARB token. I don't know if Berachain is doing this, but it appears. I mean, 3 billion seems like a lot of freaking money to get in 3 weeks. It just doesn't make sense. I don't know if there's a metric or somewhere that shows that data point, but either way, I think someone I heard say that trade is over. The L1 trade is over. Can you just quickly, we're not going to get into the full L1 stuff like you were talking before, but like, what did you mean by that? Was it Martin? You said that?
Yeah. Well, you mean like the whole idea about layer ones and
No, we don't need to get to that. I just mean, you said the L1 trade is over. Is that because you think there's just too many now? Or was there something more to that?
Yeah, there are too many, and like you, they can't really bring anything new that's not existing today. So like, think of blockchains as infra, and we have good enough infra to build whatever people want. Now we really need to like double down on real products that have
Yeah.
like real users.
Yeah, I kind of agree. Okay, let's finish off with this. We're not going to get to the other part of the L1s because that's a whole nother conversation. We don't really have the time. If the L1 trade is done, the AI trade we don't know. I think we all agree that narrative is coming back. What is the trade for the rest of the cycle? What is here? What is the opportunity? Or are we
I'm
just cooked?
biased, so you start.
Anyone have one?
DeFi 3.0
Oh,
fundamentals.
new DeFi. Not wait, is that DeFi like OG DeFi, or is this some sort of new DeFi that's coming out when you say DeFi 3.0?
It's basically the OG DeFi
OG,
coming
yeah.
back.
I agree. To me, that's the trade right now. I think it's DeFi Renaissance. I know people have been saying this one for years. It really does feel like, I mean, again, I said this, I don't know how long ago, but like stablecoins is really the only good innovation we've got here. And then decentralized finance, like taking out loans, borrowing, and having a stable dollar on chain. I mean, it's easily the fastest growing thing on chain. We've got $5 billion worth of like coming on chain every week. And then the adding yield bearing to it, et cetera, like DeFi stuff. To me, seems like the one thing that has true product market fit. They're still pretty undervalued. I mean, like a lot of these OG DeFi projects, like Sky, for example, are valued the same as virtuals, which is making $2,500 a day, right? So, like, even a lot of these OG DeFi projects are making more revenue than most of these L1s that are launching, and they're valued at way lower premium than these L1s. So, I just, I don't see a better trade right now than DeFi, and I really don't. I actually don't really see another trade other than like obviously holding Bitcoin and Ethereum and Solana. I think are great. Coinbase, Robinhood, these things, the sort of front ends. Other than that, in terms of apps, L1s, etc., I don't see much. Maybe I haven't, like, obviously over the last few weeks, everything has gotten just wiped out, and I haven't scanned and looked through everything. So like, I'm sure there's some gems out there that are way undervalued, but I think broadly, to me, it's DeFi and majors, and I don't see much else. Anyone else
That's
have
because
something different?
that's also because there's no narrative right now, right? Like this is a timing thing. If we come back and we have this conversation in a month and there's a narrative, because whenever markets are pumping, there is a narrative that is catching that liquidity, you know, things will change. I agree. Right now, when you sit back and you look, like you're going to go back to basics and the fundamentals because it's
But
blood in the water.
we always talk about on the show, we always talk about who's the next buyer. And we've said a bunch of times we think it's the next big amount of capital coming in is probably not retail, although some of it is, but it's institutions because of regulation coming in. And then the other next buyer is protocols buying back their tokens. When I look at that two forms of capital, where is that capital going? The only companies in crypto that can have token buybacks is DeFi. And then I also don't see any other tokens that institutions are going to buy other than the major L1s, because there's ETFs, Coinbase and Robinhood, because they exist in the traditional world to buy. So those they can already do. And then it's like probably DeFi tokens, because they have product market fit, they have revenues, they have et cetera. So like all the capital I think is coming in the next while here, I just don't see them going like they're not buying virtuals at $1 billion. That's
I think
stupid.
they're still buying L1s. I think that they all still that trade for them is not over. Like so many of the institutions missed on that
But they're
trade,
buying
and
those private. They're
yeah,
investing private. They're not buying the liquid tokens because they
totally.
know the scams of all these
Yeah.
L1s launching and just dumping on
Yeah,
everyone.
but they have, when they buy those privately, they have long token lockups. So I think the L1 trade still has time. I agree that we can't have all these L1s. We need more. We need focused, specific L1s, not general purpose. But I still think the L1 trade has time in this cycle. I also think we just had the chief commercial officer from Key Rock, which is like a leading market maker and liquidity provider, and he talked about how institutions are buying meme coins, and he's like, not not like it's like the major thing that they're buying. He's like 70% of institutions that we talk to are buying Bitcoin. So like, let me be clear here. And they're also interested in ETH and Solana on the majors. But he's like, they are buying meme coins. So
But that's the crypto native hedge funds like Joe McCann. That's not the institutions I'm talking about that are not already here, right? That's the ones that were already here. They never cared about the regulation. They were going to buy the shit anyway. They figured that stuff out. That's not the capital of institutions that are coming in because regulation has allowed them to. These, if they were not buying crypto because they were told they can't do it, or they weren't even sure if they're allowed to do it, they're not coming in and then buying a meme coin. That's for sure, right? These guys are very risk.
I don't know. I think blue chip meme coins, I think they will buy. I think they will.
Oh,
yeah.
Trenches.
No, because blue chip meme coins aren't trenches, right? Like these are meme coins that have been around for years. They've got strong.
Do you mean like Doge or like Dog with Hat?
Yeah, like Doge, Dog with Hat, Bonk, like the Pepe, those type. I think those type when the cycle picks up again, when the bull goes again.
Yeah, maybe, but then you don't have a good sleep overnight. If it's going down, what do you do?
Well, that's why you take 1%, you know, like I'm not saying your whole portfolio.
Yeah. Which I'm sure there's a lot of people listening to this right now that are not sleeping well over this last 2 weeks.
And if you're not sleeping well,
I sleep great. I'm all 90% because I don't give a shit. I don't buy any of these trash.
and I mean, and let's just talk about that for a second. Like, I think if you're not sleeping well, then like move into cash and chill and get out of
majors. Don't move into cash.
Or move into majors, right? But like readjust your portfolio so that you can sleep well. Let me put it that
100%.
way. Even if you are down bad, right? Like there is nothing wrong with taking a step back and waiting. Markets will go up again. They might go down more from here. It's difficult to know.
Yeah. Or just readjusting. It's okay to sell at a loss.
Yes.
Right?
Yes, exactly.
Things have changed.
I also think like you ask, what's the trade of the cycle? I think people tend to look back and make their judgments based on the past, right? But they are not looking like forward. So like maybe I'm saying something is true and like people don't pay attention to what I'm saying until it's becoming a consensus. So like think about it's year 2028, let's say, and you'll look back into this year and you'll say, oh, there were such obvious signals that this thing is going to just go nuts. And okay, what is it? And it's DeFi. Like, what else do you want to see to make you believe in that thesis? It's like, it's product market fit, most tokens out there in circulation, people use them, generating revenues, like valuation around $1-2 billion. Like,
best teams.
What else do you want?
Yeah, it's got it all. All right, we're going to wrap up there. Next week, we will touch on a bit of an L1 thesis that Martin's got going on to finish up our talk here that we just did on L1s. But boys, that was a good conversation. Thanks for joining in. That was fun.
I want to know, our community, everybody listening in, if you guys are interested in what Adrian talked about with providing liquidity on Berachain or on new chains. Are you guys interested in that? Because like that is, we don't talk a ton about how to do that, where to do that. There is a lot of opportunities to do that if you're in the trenches and you want to experiment and try that type of investing or opportunities to get yield. So let us know in the comments if you guys want more information on how to do that, because as Adrian showed, he's doing that and knows how to do that. So happy to provide you guys more on that.
Yeah, good point. All right, guys, thanks so much. That was a blast. See you next week.
As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.